Yeah, what's going on, everybody? What's going on? This your boy Deonte Burden, aka Mr. Short Dollar himself. This have a live feed with you guys to discuss something I think is very, very important. I get asked all the times because we have clients that come to us that are looking to purchase a home, they're looking to get a purchase an automobile, do different things, and they may be self-employed, and they have no way that they've reported their income outside of maybe occasional, if consistent tax filings. And that's how to set your payroll in order for you to get a mortgage. How to set your payroll in order for you to get a mortgage. If you are self-employed, you own an LLC, S corp, C corp, and you're in one of those positions where you're looking to purchase a home, purchase an automobile, you have no solid way of stated income or where you can report your income for you to make that particular acquisition. This is the show you need to listen to right now. Right now, guys, again, I am Deonte Burden, aka Mr. Short Dollar himself. Make sure I put this on here. We got the live feed going on, and also I got the call-in number for you guys to call in if you got any questions regarding it. Usually, we come on every Thursday at 8 p.m., but me and my kids going to a haunted house, so I had to start a little earlier. The call-in number for you guys to call in is 678-961-3176. Again, 678-961-376. Again, today we're talking about how to set your payroll for you to get a mortgage loan. If you have a question outside of what we're talking about, again, how to set your payroll to get a mortgage loan, wait till after the discussion. I promise you that I will open the floor for call-ins for you to ask if you have questions regarding finance, business, grants, things like that. Call in after we have this discussion. I promise you I will get to your questions regarding that, okay? You guys know Mr. Short Dollar. We talk about personal finance, business, entrepreneurship, and investing. Right now, we're streaming live on Facebook, YouTube, Instagram, TikTok, LinkedIn, Twitter, and hell, there's something I'm forgetting. But the main hub for all the information is the Mr. Short Dollar YouTube channel, where we have over 400 videos covering business finance, what we just said. Also, we have a grant playlist with over 150 grant opportunities. Best way to stay on top of the great information that we do have and all the great information we have coming down the pipe. Go to Mr. Short Dollar on YouTube and subscribe to the channel. Again, Mr. Short Dollar on YouTube. Now, going back to what we're talking about today, guys, how to set your payroll to get approved for a mortgage. A lot of times, people come to me around about tax season and they're new in business, they're self-employed, and they really don't have a solid concept or no concept at all really on how payroll works, right? I get their financial statements or their list of expenses where they'll say they made X amount of dollars, in revenue, the list of expenses, fuel, meals, things like that. And then I have on the bottom somewhere in their wages, right? And I'm like, okay, where your wages? I'm asking them, okay, where's the payroll tax and things like that? And they'll say, Well, this is the money I took out for my payroll. This is what I took out for myself. Those are the wages. And I explained to them, those are not wages, right? That is a draw that you had. And theoretically, you won't be able to write off this draw unless you 1099 yourself to pay yourself. And then I get all kind of, real funky looks then, like, what the hell are you talking about? No, this is money I took out of my account to pay myself. That is, those are wages. And that's when we have to have the discussion in regards to the difference between, what's a withdrawal, what's payroll, and what is just money that just came out your business, okay? And that's why I wanted to have that discussion with you guys, but I also had a discussion in regards to when you're ready to make those actual purchases in regards to your first time purchasing a home and acquiring that mortgage, how to get a car loan, how to set your payroll to report that. So again, this is as simple a process as possible, and also to let you guys know what happens if you don't set your payroll, what you probably have to report, to the IRS or even report to the lenders if you don't want to make those particular acquisitions. Okay. Again, I am Deonte Burden, aka Mr. Short myself. Today we're talking about how to set your payroll to give you how to set your payroll to get you a mortgage loan, how to set your payroll to get a mortgage loan. Okay. Again, feel free to tune in, chime in with any one of your questions or anything like that. And also the call-in number if you have any questions regarding the subject we're talking about, 678-961-3176. Again, that's 678-961-3176. If you have anything outside of what we're talking about, please hold your questions. I promise I'll get to you after we get through having a discussion on the payroll, but I promise you I will talk to you, okay? Please don't call before we get started then because I won't be able to talk to you about it, okay? So again, we start looking at, getting payroll started. Man, we know theoretically what's the difference between payroll and a basic withdrawal. We start looking at, let's start with the draw. The draw, because that's pretty much what most people have, because most people don't have basic payroll set up. A withdrawal is pretty much just what you took out of the account, right? Well, if you're making just say $5,000 a month and you go to the ATM machine or go to the bank, write yourself a check, you pull some money out for yourself and you want to pay for your mortgage or did certain things like that, mortgage, utilities, or grocery, that's pretty much a draw that you made to your account. The issue with having a withdrawal with doing it, unless you report it as, under a 1099, putting yourself as a contractor, you'll never be able to take advantage of it. Because again, you can't say that that's payroll or withdrawal, because what the IRS will see to say, hey, listen, this is what I paid my contractors, independent contractors for the withdrawal. Because when you report it in your taxes, that's where you can put it. And if you say, okay, this is what I paid myself with the withdrawal, you need to at least put a 1099 to yourself. And the 1099, you get to fill it out, give it to yourself, pick that up, and then also you have to report it to the IRS that you had that. That's the way you'll be able to legally account for the withdrawals. If you pull money out of the account and it's not attached to a particular expense, again, your particular mortgage, and again, we're talking legally. We're not talking, what somebody tells you or not, because there are a lot of videos out there that telling people you can write this off, you can write that off. I made a video about a month ago. Please don't get audited trying to write everything off, because all these people are telling you that's a business expense. That's a business expense. You can write this off. You can write that off. I want you guys before we go any further, you may have a discussion with the payroll. I understand when you're writing stuff off as a business, everything is relative. You can't turn around and have a business that's only making $2,000 or $3,000, but you got $10,000 in items that you've written off because you're in business. You're gonna get your ass put in jail. And if it's not even drastic getting put in jail, you're going to get audited, and they're going to drop so many fines and so many assessments on you. You probably wish you are in jail. These guys sometimes use common sense. Now, if you're in a new business in the startup phase and the business just started, of course, when you're, before you may earn some money, you spend that first year, you're buying equipment, getting certain acquisitions to actually have the business run the next year. That's nothing uncommon. But if you just got you a business, you just got you an LLC, and you're writing all this stuff off, you got all this money going out, but no money going in, I'm letting you know, in the day of AI, artificial intelligence, and these computers are scanning, you're going to get your ass audited. And when the audits come, guys, I want you guys to keep in mind, understand how that process goes. You don't get audited that year. You get audited maybe a year or two down the road when you totally forgot what happened. So just keep that in mind. You can't have this damn business that's not making any money, but you're writing all this stuff off because you've seen on the internet, I can write this off, I can write that off. That's crazy. I'm an accountant, and I'm gonna tell you the right way to do everything, not what I heard, not what I think. And just because a person hadn't got caught or got a phone call, that doesn't mean that it's right. Okay. But again, just use common sense. You just can't just write all this stuff off of your business because of your doing things in your lifestyle. If you continue to do all these things and funnel these transactions to your business and nothing's going into your business, you set yourself up for failure. So we start looking at, again, that whole concept of the withdrawals. If you got money coming in, and we're not talking about, this is not payroll, we're talking about withdrawals. And this is what most small business owners have going on because they have not set the whole process of a payroll. And payroll pretty much is you're at a wage going out, and you're also reporting to the different other bodies for to get taxed on that payroll, that being IRS, your state revenue department, and also the unemployment department with your state and on the federal level. But just basic withdrawals is money coming in, you pull the money out of the account. To be able to recoup that, guys, to say, okay, this was the independent contractor that we paid, and you say if it's for yourself, you need to issue yourself out of 1099. The thing of it is with the 1099, just like the company you may have paid yourself $20,000 with a 1099, you got to turn around on the same damn tax return and pick that $20,000 up as income. So it's not like it's going anywhere, but if you want to, we were talking about reporting it, that's one way to do it. But here's the issue that's going to come up with that. That's why we're going to go into why it's important to have the payroll if you're not prepared. The issues are going to come up with that. Majority of mortgage lenders are going to want to see if it's just stated self-employed income. That's what I mean by self-employed income. You're filing the taxes and you're using Schedule C. Which is typically, if you're a single owner LLC, you have to use the Schedule C with your 1040. When you file your taxes, you file on a personal level, you're still doing it, the single owner LLC with the 1040. If you have a partnership LLC, when you're using the 1065, the issue going to come up with that is you guys still need to show, because you're only going to get that distribution that you guys had. If somebody's going to be getting payroll in there, you still need to show it. But with money you will pull out, is again, you have no real estate way to prove that. Theoretically, with an S corp and a C corp, somebody in that organization is supposed to be getting a wage by legal purposes. Somebody should be getting a wage, not a 1099, but a W-2. So we start talking about going through the process. When we start looking at these lenders, when you want to get a mortgage, the easiest, cleanest way is to provide them with a W-2, right? Because if you turn around and say, hey, I 1099 myself, they're going to want to see 2 years of tax returns, because they're going to take the average of the net income that you made for your business and use that for your income. What I mean by the net income, if you guys notice on and you just check it out when you get a chance, on a Schedule C where you report profit loss of a business with your 1040, line 31, that net income loss number, they look at that number, and they look at the average, they combine that from a 2-year perspective, and they look at the average income that's made from there. So it's over 2 years, we're talking about 24 months. So the combined income of 1 year and another year divided by 12, the average of those two, that's what they're using as your monthly income amount. It's a lot easier, trust me, if you can just give them guys a W-2. And most of the time, there's a different level of scrutiny that comes along with not having a W-2, because then they may want letters from auditors, other information may be required. You can have some loans where they'll just say, hey, we'll go off your bank statement. What's the drawback with those? Typically, the cost is higher. What I mean by the cost is higher is that the interest rate that's charged on that particular loan is going to be higher with than's normally done with that. Guys, if you want to call in, got any questions about anything, give them a call at 678-961-3176. Make sure it's in regards to what we're talking about. Again, it's 678-961-3176. So be mindful of that, guys. You do have products out there where they will take you if you're self-employed, where they can just go off your bank statement, but the cost is always higher, just when you're doing that. Anytime you're going a non-traditional route to get financing, we're talking about typically outside of just having the W-2s, sometimes your cost may be a little bit higher with doing it, right? So just kind of keep that in mind with doing it. So we say, hey, I want to get myself set up for payroll. How much do I want to pay myself? How much? Well, that's one of the first things people say. Well, look, D, we're going to go and get payroll started, but where do I start at with the payroll? What's the number I start at? Initially with payroll, guys, if you're going to run it, I always say kind of just set the payroll off on your living expenses. What I mean by living expenses, that's pretty much what you would normally withdraw out of your account on a monthly basis to cover your basic living expenses. That may be your mortgage, utilities, groceries, incidentals. What I mean by incidentals, just say your clothing, your going out social money. And that's what I would probably start off with that. Start off with that. The stuff that you normally pay for on a consistent basis to do that. If you say to yourself, well, listen, my normal living expenses is $2,000. I'm not making enough in payroll to do that. You may want to rethink if you're going to set yourself up on payroll. You may want to rethink that. And also keep in mind with that, if you're not pulling in a sufficient enough amount of money to do that, you got to be realistic. If you can even show, is there be any way for you to report that to get approved for any kind of loan? Okay, so all this stuff got to come in mind, because it's one thing to sit here and know what the lenders require you to give to them, but if you know you can't give it to them, comfortably, you may want to rethink if you're going to do it or not. Okay, so you got to be very mindful that I'm a very big proponent of not going into a hole to acquire things, right? Because a lot of times we've seen with the PPP, one in the disaster loan. I'm telling you guys, that was a real funky time, especially coming from a taxpayer and accounting standpoint. We had a ton of people that come to us, and if you did this, whatever, I'm not picking at anyone, but I'm just being honest. We had a lot of people that came to us because the loans require people to make a certain amount of money. We don't know, pretty much in this, the rule of end and prepare. We don't know. You give us your financial statements, let us know this is the money you make, this is what we're going off for. But people were making adjustments and amendments to tax returns to increase their income to get approved for these disaster loans, the PPP loans. What's the issue with that? There's going to be a tax liability that comes along with that. So you turn around, you might have got a loan for $50,000 or $75,000, but you got a tax bill of $20,000. Subtract 20 from 50, you only got net 30,000. Is it worth it? Because the whole thing about the disaster loan could be spread out. Was it 30 years? If I'm wrong, I apologize. But the disaster loan could be spread out over that long term. The IRS wants that money that damn year. And when you can't pay it, they're charging penalties and fees right then and there. And, when I would get stuff, I'm like, okay, this is the, you tell people, hey, if you amend this is what's going to happen. Got to do it. Cool. Why are you doing it? Who you doing it for? We don't get into those conversations. But at the end of the day, there were a lot of people that I felt probably doing it. Again, now you don't put yourself in a situation like, okay, I have this tax liability. I have this loan, but now probably the money is probably gone. And then you got all kind of stress going over your head. So you got to be very, very careful when we start talking about, hey, listen, I want to get, I'm at this point. I've been in business for a couple of years. I want to go and get a mortgage. Excuse me. Me and my significant other, we're ready to go and purchase us a home. We deserve to work hard for it. I get it. But now what happens is when you put yourself in that particular position, you want to make sure that you don't do things that's going to put you in a long-term hole, right? So now we say, okay, you start off with those living expenses, right? That's pretty much it. Just say between your mortgage or rent, utilities or groceries or anything like that, that's about $2,000 a month. $2,000 a month, $24,000 a year. We're going to try to stick around that just so we can do some easy math, And your boy ain't too damn smart and ain't got a calculator in front of him, so we're going to stay in that so it help my explanation. So we're saying our living expenses, mortgage, utilities, groceries, incidentals, $2,000 a month. What I suggest, guys, because remember, when we start payroll, we got to do what? Pay payroll taxes. What's payroll taxes? Payroll taxes are pretty much what you have to report to the IRS on a monthly, depending on how much it is, usually quarterly and annual basis, right? That's what you have to put in. You have to pay a certain percentage in taxes, typically on a quarterly. If it's a little bit higher, maybe on a monthly, and then you have to put a certain dollar amount at the end of the year, taxes to it. They'll be going to the IRS, your state Department of Revenue, and typically to your state Department of Labor for unemployment purposes. And you have a small percentage you pay annually to the federal government for the unemployment as well. Here's the deal. Keep in mind, business owners, one thing that I think a lot of people miss with payroll. When you have payroll started, payroll is reported what the person, the individual, they may make, like you said, that $2,000, and just say if that individual has $500 taken out in taxes, that individual gets a net check of $1,500. Payroll taxes $500, person get paid $2,000, they get a net check of $1,500. What's the significance of that? That $500 that they pay has to be matched by the employer. So the IRS is getting cut a check for what? $1,000. Keep in mind, well, we're not saying IRS. Between those three agencies, it may be $1,000 because the person had to pay that and the company had to match that. That's where things get a little funky. Especially if you're talking about yourself. If you're the only person that's employed getting wages for that company, you're getting that 25% taken out. So we're talking about, again, 20. So, my rule of thumb, start off taking out at least 25%. Why you say 25%? Because that's kind of a good safety zone with doing it. If you run payroll for a couple months and you say, well, listen, I didn't necessarily need to allocate 25% to the side. Now, the actual payroll calculations will be the numbers. The 25%, what I would say, is just move over, regardless of what you pay yourself, in 25% of that in an escrow account. So if you're running, for 3 months, the first month, you don't necessarily report it to the IRS. You're just doing it at the end of the quarter. Allocate 25% of payroll for taxes in one account. The next month, 25%. In the third month, 25%. And the total of that, that's what you're going to, once you do the calculations, rather, not that dollar amount. Once you get the total of that, you can report it to the IRS. If you say, listen, only after, because the tax amount will vary depending on how the individual files. They head of household, single, married, filing joint. The distribution amount that they have to pay to the IRS may vary, but a good rule of thumb is allocate 25% initially to the side for doing that in the escrow account. You can make the adjustments once you gather enough data. I'll say after 3 months of that first quarter, you have a good idea how much you need to be putting to the side for payroll. But initially, I would start off with that. So, but keep in mind, guys, again, the company has to match what that individual paid in payroll taxes. The company has to match it. And again, if you're the only person in your self-employed company that's getting wages, understand what you're getting into. You have to stay on top of stuff with the taxes. Because two things happen when you start payroll. Two things happen. You can incur all kinds of penalties, fines, and fees associated with payroll, because if they're not, the reports are submitted on time, you got a fine. If the money ain't paid at a certain time, you're gonna get a fine. And I'm gonna tell you right now, most of the times when you call these agencies, they don't have feel good people that care that, hey, I really didn't know what I was doing. I'm doing business. I didn't know. They can give a damn about that. So what I would suggest to anyone when we start talking about just want to walk down that road of payroll, and what I would initially do is hire a payroll company, at least for the first, best second quarter, so you can actually see what they're doing. If you can do it a whole year. And the reason why I say that way you can watch them on a monthly, quarterly, and annual basis, what they did, gather the information up, and see could you be applicable to how you move. Could you do that? Because if they do it wrong, you have some kind of recourse as far as with the payroll company, things are reported incorrectly. And also you can see the forms, the way they're doing it, right? Because they got to give you a copy of it. But you're trying to Google search it and you don't have any kind of financial or payroll background, it can really bust your tail, because typically when we're being self-employed, we in business, we're consumed with what? Growing our business, handling our business, not necessarily getting tied up with accounting, because it's always going to be a problem when you're trying to be the plumber, the electrician, the automotive mechanic, the retail store, and you're also trying to be the accountant, the lawyer, the advertising person, all that kind of stuff. I mean, that's a recipe for disaster. And that's why a lot of businesses fail, because they don't understand that the company brought in $5, and after everybody paid, you got to get $2. But you're so stuck, you want to keep the $5 to yourself, but you stretch yourself too thin and you can't maintain it, and you end up losing everything in the process. So what I will say again, initially start off with somebody, watching them with doing your payroll, watch what they do, and if you feel like that's something that you can handle and take on, then you make that move. But again, I will take it serious, because once that door is open with payroll, guys, listen, you got to stay on top of that, especially from a reporting standpoint, okay? Get a call in number we got is 678-961-3176. We're talking about how to set your payroll to get a mortgage loan. Again, how to set your payroll to get a mortgage loan. Once that's set up, okay, you got to, you decided on how much you're going to pay yourself. We got a good understanding of how much we're going to pay in payroll taxes. We got a good understanding of how we're going to report everything on a monthly, most of the time quarterly, an annual basis. As far as that, we got all that stuff going. Now we sit there saying, okay, listen, going back where our initial discussion is, we want to get that home loan. Now we can sit there, had a conversation with the lender, saying, okay, listen, you got this W-2, which is a whole lot easier. They can take that W-2 because you were on payroll and base everything from there, right? They still may ask for, to see certain deposits in your bank account over a couple months or something like that. But it's a whole lot cleaner as opposed to showing all these different tax returns, getting letters from accountants and things like that, right? So we got that information together. Now we can go to the lender and say, hey, listen, I'm self-employed. What do you guys need to see? What I would tell you guys, talk to the lender before we get so stuck into the home or the house. You don't want to do it backwards. Same thing with a car. Find out what we're pre-approved for. Find out what the people that's giving the loan is going to ask. Far too often, people have conversation with their friends and families. They'll actually go to the dealership and go look at cars, go, get an agent, and start looking at housing, because now where the world is, where everything's accessible, people may not necessarily reach out to the agent and start looking at houses. They have no clue of what they can get approved for. Find something they're in love with on that car lot. Find something they're in love with on, what's it? Is that Red Door, Redfin, or Zillow, or whatever? Find something on there, and they're in love with it, but they can't even get a damn approved for it. And the problem that comes up a lot of times, the great thing about the digital age is we have access to all these different opportunities. The bad part about it is we don't have access to a person to talk to, give us any kind of customer service, give us some game, tell us what's right, tell us what's wrong. And that's a major drawback. Then when you call them, that's somebody in Bukhtar, India, and you don't know what the hell they're saying. They don't know what the hell you're saying. It's just mass damn confusion. So spend some time finding out from a mortgage broker or lender exactly what you guys need to see for me to get approved for a certain amount. So once you got a certain amount that they say, hey, listen, this is what you can get approved for, or you can't get approved for nothing. Then you can go back to the lab and make adjustments over a certain period of time to get approved for it, right? So now you're sitting there saying to yourself, listen, I got this way of getting this, to state my income. You just need to know what adjustments from there. You already got your incidental covered at $2,000. If they need you to show, $2,500 or $3,000, you can increase the income from there. If you cannot, you just can't get it. You can't get a loan for the amount that probably what you want to get. If you still can qualify for something less than that, you can stay where you're at, and move forward. You can stay where you're at, or you move forward. The thing of it is, guys, understand, if you can increase the amount that's stated for your payroll in order to acquire that loan, understand there's a relative increase in payroll taxes that goes along with it. So at one point, you were paying just $500 individually in taxes. Now you're paying $800. And if you're paying $800 individually, you're paying $1,600. Because that double, right? Be very, very mindful of that. Far too often people come to me like, hey, D, I got to get this house, I got to get this, I got to get that. And they are so hell-bent on the outcome and on the one outcome, and not understanding what the outcome on another end will be. The one outcome that's going to be beneficial to them, they get to walk away with that house, they get to walk away with that car. The outcome that they know something is going to be changed, but they don't want to put a lot of thought into it, is the actual liability that goes along with it. So now you owe the IRS, $2,000, $3,000. And I'm telling you, I've seen it over the past 20 years a gazillion times. People have these astronomical tax bills rack up because now you're owing $2,000, but as you being charged a certain $2,000 in taxes, because you haven't paid in the past couple quarters. Then you're getting the penalties and fees charged on a monthly basis associated with it, but you're still trying to go through this process of showing what you made, and nothing working out for you guys. You got to be smart about this. You got to be smart about it. There are tons of people that are out here on IRS thousands of damn dollars by putting themselves in situations that weren't even beneficial to them. But if you can have a lot of what we call front-end conversations with lenders and with bankers to find out what you can and what you can't get, that'll make your life a whole lot easier for you. And then with that said too, you got to make sure you listen to them. You got to make sure you listen to them, guys. Listen, this is all you qualify for. This is all you qualify. Now, if you were making this is what you can get. The issue, can you afford the uptick in that? And if you can't, leave it alone. Leave it alone, guys. Leave it alone. You'll be at no shortage of finding information. You'll be at no shortage of finding information on the internet that will give you advice on how to get approved for this loan or that loan. The thing that hardly anybody's going to give you information about is the cost. You remember back in 07, 08, 09, we had those interest-only loans, those ARMs, adjustable rate mortgages, where the rate would just could go, you only paying interest over a certain time, you can get approved for everything, but nothing was going to principal. You had those ARMs where the rate was increasing every damn month, and people went from, at one point, got in this big $300,000 with a $300,000 home with a $1,000 or $800 car note, and with $800 to $1,000 mortgage. I apologize, and then 5 months later they're paying 4 times that in mortgage. I'm like, what the hell happened? And they're walking away from it. Home foreclosed, whole economy crashed because all these people foreclosing on their homes. The banks and mortgage company got all this inventory on homes because people lost out. And guys, depending who you talk to, it's like we heading in that same direction now because everybody's bought. A lot of people have recently purchased within the past year homes at overinflated prices. Prices in the economy are still going up. The cost of living, groceries, gas, clothing, and stuff like that has been going up. And pay hasn't necessarily been going up in relation to that. And, people looking like, hey, man, I can't afford this house. I can't afford to do this, that, and that. And things going to go. So we may be, I hope not, because, God, that was some rough times. Heading to in that direction. I don't think it'd be that bad. Me personally, I don't think it'd be that bad. But again, guys, look at what's happening. Look at what's happening. You guys have to just be, I think the more conscious you can get in educating yourself in regards to what's available out there and what you can and can't do, I think you'll be okay. But when we start talking about payroll, those kind of things had to be, keep in mind. So again, start off with the incidentals. Allocate 25% to it in somewhat of a escrow custodial account for payroll taxes. And understand, guys, remember what we talked about with that draw. With that draw is just money that you pulled out of bank account, but it can never be considered as payroll not payroll. It can't be considered as income unless you report it on the 1099. But remember, the 1099 still it goes out as an expense from the business, but it still got to be picked up on your personal side as income, guys. So it's somewhat going to wash away depending on what you do with it. Okay, but just kind of keep that in mind, guys. Okay, and I'm going to make another video. More, not necessarily a live discussion, but I did want to talk with you guys about it. That's why I ran the live stream in regards to it. So if any one of you guys out there, you're looking to get a home purchase, but you're not familiar with the process, because I know a lot of times when we're going through those processes, depending on who you're dealing with, they may be talking all over your head. You may be lost. You talk to your family and friends. They've done something, but they tell you a truth or part of their story. You don't know the whole thing. You're like, man, how the hell did you get approved for that? And I know you make the same amount. You're not hating, but you're just trying to put it together. How did you get that? And I know I've been trying to do it and I can't do it. What's different? And they really don't want to share it with you because you're not getting the whole story. And that's why, me being in the industry for years, I try to have these discussions with people. So if I can answer questions, and if I can't, I can at least put you in the right direction with who can help you. Again, I am Deonte Burden, aka Mr. Short Dollar himself. We're discussing how to set your payroll to get you a mortgage loan. And stream live on Facebook, YouTube, Instagram, TikTok, LinkedIn, and Twitter. The main hub is the Mr. Short Dollar YouTube channel. Again, Mr. Short Dollar YouTube channel, where we talk about personal finance, business, entrepreneurship, and investing. 400 videos on the YouTube channel, grant playlist with over 150 grant opportunities. The main hub is the YouTube channel, so go to the YouTube channel and take advantage of those over 400 videos on the YouTube channel, okay? Let me see right now. Do I see? Now, guys, with that wrapping up, the floor is open. So if any one of you guys have any questions, feel free to put something in the chat. Feel free to call in. Get a number 678-961-3176. Again, 678-961-3176. That's the call-in number. So if you do have any question regarding what we're discussing in regards to the mortgages, or if you have anything regarding finance, entrepreneurship, business, so even some of the grant opportunities we got listed on the YouTube channel, you got me right now, so you can ask those questions. Got a little time before I got to head out and get ready to go to the scary house. I'm going to the netherworlds. It's scary as hell too. Me and the kids went last year, and I think I scribed more than I screamed probably just as much as all the ladies out there, because your boy ain't really a big horror fanatic, and I went in there probably with the wrong mindset, trying to be all cool and stuff, and those little damn Martians and aliens scared the hell out of my ass. But we had a blast. So again, we think ready to go and have a good time again this year. So y'all, what they say, just pray for me. Pray for me. Hopefully on wet the pants to do nothing like that. But I think we're gonna have a good time. But again, guys, you got any questions regarding anything? Don't see anybody. Appreciate everybody tuning in. Again, 678-961-3176. Or hit me up in the description section. Let me scroll through everything. See anybody have any questions? What we got? Nobody got any questions on TikTok. Nobody on YouTube, Facebook, Instagram. Nobody got any questions or anything like that. With that, and here's the deal, guys. If anything run across your mind later on, feel free to just leave anything in the comment section. I answer your question for now. I check my comments all the time, but I'm glad you was able to have this discussion this afternoon in regards to how to set your payroll to get a loan, because there are a lot of people out here that are self-employed, that are new in business, or are looking to go into business, and a lot of things that they don't think about. They're so stuck on the actual business of doing the landscaping, doing the plumbing, doing the painting, starting off the salon, but they don't think about the infrastructure of the business, making sure you got a payroll set up, make sure you got proper insurance set up for yourself, not the business. Those kind of things, retirement accounts, things in place just in case, being in self-employed, you get sick, you go down that road, you got PTO, you got paid sick leave and all that kind of stuff. So what mechanisms are you going to have in place to protect you when things happen? Because it's not a matter of if stuff happens, it's when stuff happens. And the better prepared you are for those kind of things, the better you will be in the long term, just staying in business. Because, being in business, what is it? Averages, I don't even think it's over 2 years. The average, most people stay, in business for small businesses. Because you can, we don't want to get confused with like a little additional hustle that you got to have some money coming in, not knocking it, but it's not the same thing as that business that you're reporting everything with doing that, okay? So just be mindful of that, guys. And again, if you guys can't think of anything on top of your head in regards to payroll, getting payroll set, feel free to leave a comment. You can reach out to me. On the Facebook, LinkedIn, and YouTube channel. That's what we have. All in the description section of the video, all the contact information for us. If you want to call the office, if you want to reach out to us later, all the contact information there, especially, and also all the different social media platforms as well. So definitely reach out to us. You got a chance. We got here. Angela Bland, thank you for keeping it real and to the point. God bless you, real. Bless you, real man, king. Thank warrior. Thank you. I appreciate it. I appreciate that a whole lot. It means a lot, Angela. We got a lot more great information coming on. You guys know my other YouTube channel, Change the Lives, hosted by your truly, Deonte Burden. If you put my name, Deonte Burden, and the search on YouTube, you should see that little blue man icon come up. We have a lot of there. We talk more about motivation, personal and professional development, parenting, family, a lot of life stuff that's on there. There's a lot of great information coming on there. And pretty much everything that's on one channel is on the other in regards to the different platforms. Facebook, Instagram, Twitter, TikTok, things like that. So definitely check us out there. But again, today discussion was how to set your payroll to get you a mortgage loan. Again, guys, if you are looking to, you got me free right now. And like I said, Mr. Short Dollar, not Mr. Cheat Dollar. So, again, when you got these opportunities to ask me questions, things like that, please take advantage of it. But anything does come across your mind later, I promise you I'll get back with you and ask your question. If it's something that, we can take care of in a quick discussion with doing that, okay? But look, I'm finna go on and get ready. Don't see anybody with any questions and stuff. I want you guys to make sure you be safe. Enjoy yourself. Again, there will be no 8 o'clock show tonight for Changing Lives or Mr. Short Dollar. But I love you guys. Be safe out there, and I'll talk with you soon, okay?